Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. Happy Friday to you and your family. We're going to take a big look here at big surprise Bitcoin, obviously, to help understand, once again, best practice, big picture. Take a look at the potential for breaking this key level resistance, in addition to a few other factors. So at this point, I'm not a financial advisor. Just bear that in mind. If you'd like to become a better trader, I do offer a trading academy, a community, and signal group, which is, of course, just an opportunity for you to become a better trader. It's kind of your one-stop shop for everything. I share my trades with my community. I also provide you with an academy to teach you everything that I know. And more important, we got some awesome, esteemed traders there. And we're all learning and growing together. Awesome experience. Been a very fun situation. So thanks again to my current community members for just being an awesome part of my life. Now, taking a look here, of course, at Bitcoin, we can see we are breaching 24,000 once more. Now this one could hold because we've attempted it twice now, and this could be the third time to get us through that resistance. So we'll see here in a moment, of course, if that's a possibility, but generally speaking, 24,000 is a key level resistance. Same with 23,200 as far as a previous support. I was expecting the price to come down and bounce off that, but it really just in essence bounced off to 23,400 instead, a little bit higher of a price point. Didn't come down that low. So the trade I was planning to send or take this morning, unfortunately, I slept right through it. And that's just kind of the way that it goes sometimes, right? But in the general sense of how things are looking right now, it's looking much more bullish than bearish. You could argue that this is a bull trap, but honestly, there's a lot of reasons why it's not potentially that either. So let's go ahead and take a look at some obvious stuff here. We're going to skip the monthly and the weekly because we've already kind of communicated that. In fact, I'll do an in-depth analysis this weekend once the monthly candlestick closes, and we can kind of look at that as well. But for the moment, let's go ahead and go with a daily on down. And with the daily here, of course, we can see that the RSI is not overextended just yet. We're at about 63 or just, sub 70. And that's a case in point where we have a lot more opportunity for the price action to continue to progress higher. Okay, so again, definitely something that we could see. There's more room for growth here, so to speak. We're not at this shelf. It's been a comfortable, nice, healthy increase, even though the last couple of days might seem unhealthy in the sense of how strong it increased, but there's been great consolidation periods in between each one of these efforts. So again, we'll look at that here in a moment, but generally speaking, there's nothing here that's really adverse at all on the daily that I can see. We're above all key level moving averages and resistances, so it's ultimately just a really positive situation, okay? So just bear that in mind. We're looking pretty darn good here for the daily. Now, when we look at the 4-hour, we can go ahead and see a very similar situation in that sense. We've got this bullish engulfing candle here kind of taking control, but more importantly, nice consolidation efforts at key level resistances. So big surprise, the price is consolidating right at these resistance levels and then breaking through. That's a very natural progression. So hypothetically, this next push should retest a higher level than 24,400, our most recent high. So I think it's pretty likely we're going to see a continuation of the upside. Another thing to note too is the RSI is overextended though, so you got to bear that in mind. That's why I expected a pullback. This pullback wasn't as great as I was hoping for. So if you were to take entry, just say now, you might want to consider a second entry target closer to 23,000 just to be on the safe side in case the price were to kind of pull back and essentially fill that little area, that gap there, and basically calm down and relax on the RSI. Because again, this is a very strong resistance level here at 70 on the RSI on the 4-hour in most cases. So I'd be surprised if the price just shoots straight up from here. Okay, it wants to. You can kind of tell that it's at that level where it could. But should it, right? So in other words, it would be overextended in that sense if we were to go that route. Another thing to note as well here is that we did get enough consolidation here to get a reset on TD sequential. So even though it was fairly overextended in this time frame here, we got this nice little reprieve here, this candlestick to close lower to essentially give us enough confidence in knowing that, hey, this could continue much higher. All right, so again, regards to the RSI, the overextension is not quite there. It's not insanely, thorough, I guess you could say. So in that sense, at this point, we're looking pretty good in the overall sense, but on the same accord, I don't love that the RSI is that close. That's kind of a little bit on the higher side for me. Anyways, looking at the other moving averages, we can see the 20 intersecting with a 50 in upward fashion here. You could argue that's a golden cross, but it's technically not the most appropriate. So honestly, it doesn't really matter. What's the important thing here is though that the 20 will oftentimes work itself concurrent with a lot of price action. So we could very well see that eventually get tested. For now, it's nothing to really worry about. Again, nothing really to write home about here. So I would say overall, in general, we kind of have conflicting information here. We have enough consolidation to tell us the price action is going to increase, and that's why it is increasing. But we also have an overextension to the upside at the relative strength index telling us that, hey, in the last 14 candlesticks, we've seen a significant increase, and it shouldn't go much higher from here. So again, the price could reject out at this key level and come back down. I think the likelihood of that is lower than it going through and breaking, though. It just kind of has that feeling. So again, you see this here, nice, healthy continuation patterns followed by breakout. This is a little unusual for it to come down and bounce off that quickly. It should have spent more time closer to 23,200 and then gave it a little bit more confidence to move up. But for right now, we have the volume to support that, and increased volume is nice. Another thing to note also as well is that if we see here, we can see that we've got the traditional markets are up. They gapped up pretty significantly here today. That's a very positive sign, along with the dollar index kind of, in most cases, kind of just drawing fairly dead or even over the last 24 hours. So with all those things kind of combined and Bitcoin on the increase, Bitcoin dominance, of course, is going to kind of remain steady because even though some alts are taking off, a lot of volume is going straight into Bitcoin right now. It's kind of evening that out, so to speak. Again, just some little things to kind of add to the equation. It makes perfect sense. Just bear in mind if we were to get like a gap down, for example, on Monday morning, then there's a great chance we're going to see a correction to fill that gap. And in this case here, for right now, when it comes to Bitcoin, that's not super relevant for the moment. But again, something to think about over the weekend. That's why it's common practice to take your profits on Sunday before the market opens on Monday in most cases, because if you have a green Friday, which is kind of shaping up to be a green day here so far today, then we could very well see a green weekend followed by a red Monday. There's definitely a cyclical nature there in regard to profits being taken. I'm honestly a little surprised we haven't seen as much profits being taken here, just based on the fact that we had such a large increase only 3 days ago. But hey, time is still on our side here, right? We've got the rest of the trading day to go, and I do think that we should try to remain patient, of course, until the end of the trading day, but on the same accord, it really just depends on your trading style and what type of trade you're trying to take. So again, that's kind of where we're at there. Patience is key. Try to remember that. So take a look here, of course, at TD sequential on the hourly. Just to kind of clarify, we came up to a 9, got a reset, back up to a 7, and we've kind of been resetting between 1s, 2s, 3s, 4s, and 5s. So not really a lot of consistency there. What I'm looking for here, of course, is the cloud, and this does tell us that we are still above the cloud, which is positive. Okay. Our conversion line's above the baseline, which is good. We still have enough momentum to progress and continue. Only dilemma I see is that we have the lagging span soon to intersect with the price action. So it's really just telling us that it spent too much time here consolidating at this level, and the likelihood of a pullback is greater than it would be for the price to increase. Again, these haven't intersected officially yet. This literally could go up like this, and we'll see this come up and clear it, but it's looking like it wants to kind of test that level. So in the next couple of hours, if the lagging span kind of comes into the price action, it may be advantageous to take some profits if you're in a long right now, just to ensure if the price were to come back down, you're not in a terrible shape. What I usually like to do in these situations is take 50-60% profit my first target, and then even if I don't hit my second or third target, you can essentially let the rest ride depending on your overall position size. Okay, so again, it really depends on the overall sense of how you plan to trade, but generally speaking, that's what we're looking at here. More positive than negative on the hourly, but once again, this little run could be coming to a tentative end. Doesn't mean the price is necessarily going to plummet, but it does imply that we could very well see a retest of 23,200 in that range there, just based on the simple fact that this push up here was kind of, I wouldn't say it's unwarranted because the traditional markets are up, of course, but it should have had more time to consolidate. And I think at this point, we should expect the price just in general to likely more so increase from here than it would be to decrease from here. Most of the signs that we're seeing here on a technical standpoint, minus any fundamentals, is just the simple fact that we're looking slightly overextended on the 4-hour, but most everything else is telling us we've got a green light to either continue to hold our position open. Well, it's probably advantageous to take some profits, but it's also telling us here as well that we've got some gas left in the tank, and that this push could very well continue based on this being a key level resistance. Once we break through that, there's really not a lot of volume in between 24 and 28,000. So that could really ramp up hard if we break this level. Now, granted, will it do that over the weekend? It's less common, less likely, but it could still occur. What I'm speculating will happen is we will see probably a green weekend, as long as we don't close on like doji candle here today. So if we just say we close at 24 or higher, then there's a great chance that continuation over the weekend would continue, based on the simple fact that most of the laymen's like ourselves are in the market trading over the weekends, and retail investors, etc. They're all kind of waiting on the sidelines to to take their profits when the time is right. And Mondays are typical profit-taking days. Same with Sunday evenings, of course, because the Eastern market opens as well. So again, depends on where you're at, of course, in the world, but Eastern Standard Time, like just say 8 p.m. Eastern, for example, on Sunday, you want to kind of pay attention and see, because that's when the market's open for the Eastern, part of the world. So anyways, that's just some stuff to throw out there essentially. But at this point, I'm getting more bullish vibes and bearish vibes. And I can say that it's a likelihood the price will continue to progress higher to retest that level. Just keep in mind, the more often you retest a level, the more likely it is to break. And if you kind of start counting here, just say this rough estimate of 24,000, it's been tested twice here, 3rd, 4th, 5th, almost a 6th, 7th, 8th, and now a 9th. So, I mean, really, you add that up, it just keeps on retesting this level. Granted, you take a look at the daily, it's a slightly different story. It's only the 2nd or 3rd retest of this area, but it's still enough to notice, right? And anytime you break through that key level resistance, there's typically a nice run. It's almost as if it's an all-time high for Bitcoin again, right? If you take everything out of the equation and you kind of take a look at the overall situation here, the amount of volume that we have below the price point right now is very helpful to understand that, hey, we've got a solid foundation at 21, 22, and 23,000 based on volume alone. We break through this level, look at all this volume. There's hardly any. That would allow for us to kind of roam free, so to speak, likely to the upside, to retest that 28,000 to 30,000 range. Again, I think that we're more likely to see that than we are downside, even though it is still potential. Keep this in mind. We've got to keep this in the forefront of our mind. There is still potential to see, 14, 15,000. We have to see some kind of crazy, nonsensical thing happen. I would say it's probably more so a fundamental catalyst that'll cause that to happen. But at this point, I wouldn't be surprised at anything, honestly. The way that things are shaping up, it's a very interesting world that we're living in, specifically when it comes to crypto. But hey, here's the cool thing, and this isn't guaranteed, but this is looking very good. We're up over the 50-day simple moving average now. This descending trend line is essentially almost null and void at this point. I say almost just because I want to see a little bit more confirmation, especially a break, more importantly, a break above 24,000, a clean, solid close above 24. But generally speaking, 3 strong green days here above does give us a pretty good indication that the bearish trend is waning, and we have a potential bullish, waxing on the horizon, right? So again, that's just generally the concept, but keep this in mind too. Just because we're breaking through or breaking out of this bearish downtrend for Bitcoin, and just say hypothetically we found the bottom, it doesn't necessarily mean that we're in a bullish market. It just implies that we're more so in that transitionary time frame, because oftentimes you go from descending to a horizontal pattern to a vertical pattern. Okay, so descending, horizontal, ascending essentially. And we're, just because we're breaking through this little resistance does not mean we're going to go parabolic. But it does imply that we could fill that gap between 24 and 28,000 fairly soon. So I would gear up more so for a long, and I would say that longs are probably a little safer right now than a short. And then on top of that, just in general, position size effectively. Again, to my community members, make sure that you have small position sizes, no more than 5 or 10% on your leverage account. And the main reason why is because if you get stopped out, you get liquidated, whatever the case is, you're not wasting your whole entire account and getting blown out of the water. Unfortunately, there's some of my members recently, like half of their account got drained because we missed a trade. And that happens all the time. Missing trades is going to occur frequently. So why not protect your investment, right? This is investing. Once again, not gambling. You're basically gambling if you're putting in more than 5 or 10% of your overall portfolio into a trade, because it's extremely risky when you use leverage. Okay. Again, spot exchanges can be maybe slightly different, but you still want to apply the similar mentality and mindset to that as well. Because at the end of the day, this is a profitable industry if you can be profitable, right? If you can minimize that loss and maximize your gain, all the more power to you. And again, it works within risk tolerance too. Those are all things I teach in my trading academy. So make sure, check that out if you haven't already as my current members. If not, that's cool too. But generally speaking, I think that that's probably a very helpful thing, is to be in the right mindset to trade, because really being a negative trader doesn't work very well. All right, you probably know this already. Anyways, thank you so much for joining me here. I hope this did make sense and I explained things correctly. And we'll look forward to seeing you in the next video. If you're not currently a community member, again, CryptoCache.tech is a site, link in the description below. Hope you have a fantastic rest of your day and a great weekend. We'll talk to you soon.